Good morning, everybody out there. Welcome to this week's live episode of Bulls, Bears, and Breakfast. Has been quite a week already on the markets. That started on Sunday with a nice, short squeeze, we can say, in cryptocurrencies, especially, of course, Bitcoin and Ethereum. Today, we want to have a look at what happened. Also, quite a number of other things, in my opinion, that we need to talk about. So I would say let's not talk a lot here around and jump right into the action. I just want to make this a little bit bigger. As always, if you have questions, guys, ask them here. After I'm done with my little presentation, I will, of course, then again answer your questions as always. So yeah, let's jump into the charts, and quite an interesting setup here, in my opinion. You might remember when I talked about the markets, about the cryptocurrency markets, that is last week on Bulls, Bears, and Breakfast, I said that even if we have like a little bit squeezed to the upside, I think the upside potential is limited currently to this area here. So this area between the resistance here at 28,500 US dollars and the area where the 200 days moving average is currently, which is the thick red line here, which is at 28,000 US dollars currently. And yeah, and I didn't expect the spike upwards so soon, of course. I thought we were going to have a little bit more sideways action. But this is where the bull run ended. Then yesterday, first of all, surprising, of course, here that we had this large candle to the upside at a time where normally you wouldn't expect so much volatility for the market. So this was when I was still sound asleep somewhere on the night between Sunday and Monday. But this is what Bitcoin likes to do sometimes in phases where there's a low volatility. Somebody places probably, a long market order for an insane amount of money, for a couple of millions, a couple of 10, couple of 100 millions, and then rise the prices up. Prices continue then upwards because all the people, the retail traders that are short currently get squeezed out of the market. But it stopped here. And from what I can see now, if I have a look here at where is the chart here, the liquidation chart of cryptocurrencies for the past 24 hours, we can clearly see here that more long positions were liquidated in the last 24 hours. So probably that's why I said yesterday also on Telegram, I don't think it's the time to FOMO already into the market. Now again, it's nice to see such a spike, but probably a lot of people are going to get wrecked as the slang I think goes here again on the upside, and this is what happened. So clearly we bounced off this. This area here remains an area that is a bit difficult to overcome, although, of course, not impossible to overcome. And many things are going to depend here, of course, on the economic data coming out. So we have today here Joel's job opening, for example, at 4 p.m. CET. So what is that? 2 p.m. UTC. The more important economic numbers, of course, coming out this week are the non-farm payrolls on Friday at 2:30 CET, 12:30 UTC. And the expectation here is a little bit of a weaker job market, the unemployment rate going down, yeah, for sure, but less newly generated jobs outside of agriculture. Forecast here 170,000. And this is also what the market is kind of hoping for. Of course, we're going to talk more about this, what that all means, how to interpret this, what is going to happen if a number is better or worse on Friday on our live stream. Yes, we're going to do community trading also. We still have some catching up to do because last time was the first time we kind of burned our hands a little bit. But the market is kind of hoping here actually for a worse number, because a worse number would mean the economy, the job market is weakening a little bit, which then in return leads to the Fed probably again not raising interest rates at the next meeting, which is going to be in November, on November 20th, I think, because this is also what I'm playing at the moment. the cards I'm playing trading wise on an economic scale, that is that the Fed is continuing not to raise interest rates further. So we've reached this interest rate plateau, which I've been talking about for a while now. I hope you guys grabbed your coffee, by the way, as well. I already had my breakfast today, so it's just a coffee, a black coffee for me, and some water. So this is going to be interesting. The market's very much going to eye that. For sure, we are going to see a reaction, not only, of course, in cryptocurrencies, especially also in the US dollar. US dollar, also a lot of stuff going on. We're going to look at this in a while. Let's have a look here at the S&P 500. Stock markets have performed much, much weaker than the cryptocurrency markets. And this is always something where I say, hey, this is kind of nice. Of course, this support here at 4,300 has now turned into resistance because we clearly broke through it and we're now 1, 2, 3. Today's the 4th day, potentially rejected by it. So next stop here, probably if we don't recapture this, and again, probably this is going to depend a lot on those non-farm payrolls on Friday, could be down here at the 200 days moving average, which is currently here trading at 4,220, and then at 4,190 to 4,200, this area of support here. And for swing trades, I also wouldn't touch it before we go. I think it's extremely risky to go long here and to kind of gamble that we are going back to this area of 4,580 to 4,600. I wouldn't do that at the moment. That would be a risky trade. The trade that makes a little bit more sense at the moment would be to try, if the market really tries for the 4th time to go up here over this support, over this resistance here, to try to play a short here, which would go down all the way then to 4,220. Although also not my favorite trade, because you guys know, contrary to many things that you currently read on social media, also from prominent people like, for example, Peter Schiff, who tweeted yesterday something again, I'm quite optimistic. Yes, I still think there's going to be a dent down the road in Q4 now of 2023, caused by an enormous debt problem that has been accumulating in the USA. If you are already having a record deficit of trillions over trillions of US dollars, and now suddenly every time you give out a new bond, you have to pay like 4.5 or 5 or 5.5% of interest rate on this. This is, of course, a whole different story than paying, what was it, the 0.25% that we had just shy over a year ago. This is going to become a problem, probably late Q4 2023. I expect this in December to take effect. And there's going to be turmoil on the market. But long term, it's going to lead into, and by long term, I mean like Q2, late Q1 2024, early Q2 2024, going to lead probably in interest rates falling again, because the Fed will need to help the economy to recover again. So they are going to be pressured by politics to do so, and they are going to give in eventually. And this is around the time of a Bitcoin halving then, which should cause a super bull market. This is my theory. This is the theory I've been playing since October last year. So far we have been on the right side with this one. Quick look also on the US dollar, because it's a slaughterhouse really for other currencies at the moment. I always look, if I analyze the US dollar on Euro US dollar, I know a lot of you guys out there look at the DXY, the US dollar index, which is a basket of other currencies against the US dollar. However, 50% of this basket is made out of up by euro. So you might as well, in my opinion, at least look at euro dollar to analyze the US dollar. And yeah, we can see here, we just broke through another support there yesterday. The one we had here at 105. So this I already turned this into a resistance here. I mean, what is the next stop here? Next support would be here at 103, in my opinion. However, if we zoom out a little bit, what is kind of interesting maybe now is to look for confluence. I played a lot with the Fibonacci's here on the last rally we had for the US dollar. Remember, euro US dollar going down means a stronger US dollar, because you pay less US dollars per euro. And By the way, guys, I need to look somewhere. Oh, thanks God. I thought for a moment here I forgot to turn on my microphone again, like last Friday. Uh, there would have been something, 10 minutes of talking with you guys just seeing me like last Friday. But anyway, so what I want to do here now is in order to kind of get a feeling like how far could this whole thing go, what I want to do is I want to apply some more Fibonacci retracement. So for the what was happening between the very low point here at almost 0.95 we had and the last high we made at 112, almost 113 here. And I want to ideally see how these line up with other areas of support and resistance. You see here at the moment, they actually don't line up very well. We have a 50% retracement here at 104.14. So let's say 104 for sure. This is going to be important area again, because you see if the long-term trend is intact, then normally what you see is a move after you have a strong trend like the one we had here, for example. You have a reversal to the 50% Fibonacci. We almost went to the 61 there, by the way, and then it goes into the opposite direction. So somewhere between this area here of 104.14 and that's a long shot away, 102.11 that is. So let's say 102, we might see actually then a reversal into the opposite direction again. But that's a long shot. That's nothing we can like trade immediately. So just be prepared, when you see like quotes or prices down here in that area between 102 and 104, that probably then again you're going to see a reaction upwards to maybe 106, 107, maybe even 108. But we have to monitor this. At the moment, I wouldn't touch short US dollar positions with a broomstick. It's very, very dangerous. It's very easy to get burned fast. So if you want to trade euro dollar as a swing trade, I would always look for short entries in euro dollar. So short euro, long US dollar, that is, of course. Or if you trade the DXY, that would be a long DXY position, of course. Good. That's for the short-term uptrade. So no immediate action. For sure, if we go up here, Bitcoin to the region here of 28,000. I was a bit slow there yesterday. Actually, I had planned to play a little bit of a short position there, but I went so fast yesterday and I was doing some video editing, so I kind of missed it. And if there's one rule I always have, it's like, if you missed a trade opportunity, don't try to jump on board the train anymore. Just wait for the next trade separate there's going to be. However, happy to see that volatility is a little bit back, because nothing is more boring than this dreadful sideways phases we tend to have there over the course of the last months, really. Yeah. So let's hope this isn't like a spike like we had last time here in August, up and then down again and then sideways. Maybe after all, we're breaking out, going to 31,000. However, there is also still the possibility, guys, although I'm bullish, that we are still going to see this final sell-off to somewhere this area down here between 23,500, 700 to 25,000. This is a possibility. If that happens, everybody out there on social media, all the so-called analysts and influencers are going to talk again about 15,000 and 10,000 and Bitcoin going to zero. However, that would be very typical for this accumulation phase we're in, to shake out the last players with the weekends, so to say. Yeah, let's have a look here at October in general, because I think October is actually a very, very good, historically speaking, a very good month for Bitcoin, for the cryptocurrency markets. I also talked about this in the chat, in the Telegram Academy group there, that in September, historically speaking, always a bad month for Bitcoin. Since 2013 up to this year, we only had, for example, 2 instances where we had positive returns, positive numbers in terms of price development for Bitcoin. 2023 now is going to add an entry to this, because we actually ended up almost 4%, 3.9% in the green numbers. However, if you look at October now, it's exactly the opposite in October. If we look back since 2013, we only had 2 months, 2 times, 2 occurrences where we had negative performance of Bitcoin in October. That was 2014 with minus 12.95% and 2018 with minus 3.83%. We are already up 2.41%, but still a ways to go. However, we traders like to always look at patterns, of course. Makes me quite optimistic for October, that we are maybe Bitcoin is going to surprise us. But it could be, like I just said, that we first go down into this area again, and which would shake a lot of weekends out of the market. A lot of people, imagine we go down here from 27.5 or 27.6, where we are within 2 days, to under 25, potentially 23,500 US dollars again. For sure, there's going to be turmoil on the markets. Turnover, trading volume still is quite weak. However, October, normally a good month. November, also more on the positive side. December is always a mixed bag. For sure, we are going to see a little bit more volatility coming slowly into the markets again. And then we are going to finally enter 2024, the year of the next halving. I'm looking forward to it very, very much. Yeah, I said it earlier. Some people very negative for the markets. One of them being the gold bug Peter Schiff, who tweeted about 16 hours ago, the financial crisis that's about to hit is easier to forecast than the one that hit in 2008, as it will be much larger and do far more damage to the economy. That means the more obvious a looming financial crisis is, the harder it is for Wall Street or the Fed to see it coming. I mean, that is like, what to even say to this? I think what he's referring to is the problem of debt accumulation that I was talking about. Yes, I'm still going to do a video also on that, but I had a lot of production things going on at the moment. And of course, I want to do it in a good way, not just, sit in front of a camera, talk for 10 minutes, because it's a rather complex thing to talk about. However, as I said before, I don't agree with him. There is going to be turmoil for sure, but the Fed is going to fight this, and is probably going to do so with interest rates coming down. I still remember 2008 when everybody said the world is going to end. The world is going to end. This is it. Our financial system is going to blow up. Well, and people continue to say that and missed out on one of the biggest bull marks in the history of the stock markets, one of the birth of cryptocurrencies with return on investments in the hundreds and millions of thousands of percent. And just why am I showing you this? Be a little bit careful, when you read something like this. Okay, you might, of course, think Peter Schiff is a smart guy. He is smarter than me, probably has a much, much better economic background than I do. However, just because you're smart doesn't make you a good trader or investor. Or do you know any really analysts in bank, or maybe the guy in the bank you go to sometimes and talk about how to invest your money? They are not really smarter than you. They don't know much. Maybe they are smarter on the paper, but they are not. So do your own research there. Don't just believe everything that is said on social media. That includes me, of course. Also, don't just follow what I say here. My aim always is to get you to a state where you can think for yourself. Then I saw this morning here, just in 3 hours ago, Sam Bankman-Fried will stand trial for one of the biggest frauds in US history, facing up to 115 years in prison. Wow, that's a long time. I still cannot get over it, by the way, that this guy's last name is Bankman. It's like really like the villain of some kind of Batman movie or something. Batman versus Bankman. So what do you guys think? Like, is he really going to end up in prison, or is he by some sort of miracle going to be bailed out and will try to do the same stuff he did over again? I hope, by the way, nobody, and it's almost a year ago now, I think it was last year, November, right, when that happened with FTX. Actually kind of amazing that it took so long, that he stands trial. Then another picture, which I found quite interesting, actually a video I found this morning on Twitter, by documenting Bitcoin. So go and check them out on Twitter, or X as it's called now. I cannot stop calling it Twitter, which shows a little video about a Bitcoin mining facility, which is powered by nuclear and solar energy in Norcross, Georgia, USA. And interesting here, all this Bitcoin mining equipment is submerged in a liquid of synthetic oil, which of course cannot have any electrical conductivity to help to cool it. So it's kind of like when you build your own gaming PC at home, you know, and you have it water cooled, for example. This is kind of what's happening here. And if you look at the video, you can kind of see it indicated here, all the equipment that is under water, under oil. This is how Bitcoin mining is done on a professional level nowadays. It's nothing to do anymore with, hey, I run my laptop and do some mining and hope to hit the jackpot and get some Bitcoin. Or I remember there was this one post in, was it 2009 or 2010, somebody complaining, oh, my home equipment, I can only mine like 500 or 1,000 Bitcoins a week now. Well, things have changed, but by that you can see how big of an industry this is. It's not going away anymore. This is also a major factor for the regions in terms of economy, in terms of taxation, and so on, in terms of jobs generated for areas that have those Bitcoin mining facilities being run. Bitcoin is becoming an adult asset, so to say. And next year, we're probably going to see much more influx of professional, institutional investors out there. Then, I almost forgot here, we have a new promo code for you guys called Bulltober, in expectation that October is going to be a good month. As always, in order to enter this, you need to go to global markets on the account you're using. In my case, I'm, for demonstration purposes, using the TIFA US dollar. Now, when you enter it here, Bulltober, let's click on activate, success. And then you can see I get 50% discount on fees. Of course, I need to make a bit of a deposit onto this account also. So if I, let's say, deposit here 500 US dollar TIFA that are still lying around there, it's activated, and I get on the global markets here then a nice discount of 50% on trading fees, which is of course perfect, for example, for what we've planned for Friday for trading the non-farm payrolls out there. Then, since we're already here, if you've watched my video from, when was it, last week Friday, on social trading, on how to build, and the live stream also on how to build a portfolio out of copy trading, you notice also that I used this account for this. And let's quickly check out here, since we're already here, how those copy trading strategies are doing. So in total, with this little account, I'm following 4. And you can see that I'm already in the green. So the TIFA US dollar denominated one, 2 out of the 3 are nicely in profit. Well, especially to mention the Stone Hedge one here, which is up by 9%, but that's also one of the more riskier one. Cinnamon up here by 0.6%. Only price action lagging a little bit behind, but of course the month is still long. And this is the exact reason, you remember this, guys, why I said you better build a portfolio. Don't go all into one strategy, because you are going to have times where one strategy doesn't perform as you expect, maybe. So in this case, this is here the price action one, but just minus 1.8%. But then you'll have other strategies that compensate for that by performing better than. Another one here, the Bitcoin Bit Energy 2, we are following, also up 2.2%. So everything going well there. And of course, I'm doing this only with a little account here, but we are going to continue to monitor this, just that you get a feeling how this whole portfolio effect can be long-term for your benefit. Good. My God, talked for 25 minutes again. Let's have a quick look here at the chat. I'm looking here if we see some questions. Yeah, here a question from from one of our frequent viewers. How you're doing? Bitcoin price getting increased in the last month. However, a few days US dollar getting stronger against others. Will it affect the Bitcoin price? It's kind of surprising, actually, that we see a bit of decoupling of Bitcoin, of the cryptocurrency markets, from what is happening on the stock markets, who went lower while cryptocurrencies went higher. And especially also what we see in the US dollar. So you're absolutely right there. This move of a stronger US dollar is normally a typical risk-off move. So people are market participants are expecting a weaker stock market, a weaker cryptocurrency market. That's why they buy US dollar. They are, of course, in reality not buying cash US dollar. This US dollar that they are buying goes into US dollar denominated bonds, because those bonds, and we can have a look here at the 10-year one, for example, they yield at the moment 4.67%. So the obvious decision when you're an institutional investor, when you run a pension fund, and so on and so forth, is am I going for those so-called risk-free 4.67% I get if I per year, that is, of course, if I put my money into US Treasury bonds for 10 years, or am I going to opt in for maybe risky 8 to 10% of average stock performance, or maybe even if I'm a small investor, pension funds probably cannot do that yet, am I going for Bitcoin? So yeah, it's kind of unique, and it's something we do not see often, that cryptocurrencies decouple a bit from other risk-on assets. So the question here, and I think we're going to see the solution at least indicated on probably on Friday for this, is really is the economic picture supporting what we are seeing right now, or are the numbers so out of line, either to the north or to the south, that what we see in terms of performance of a stock market, what we see in risk-off move from the US dollar buying, is going to drive cryptocurrencies lower again. That is really the question here. I cannot answer it now, but for sure we're going to be smarter after Friday's non-farm payrolls. Here a question from Bambang Arum. Just hold on a second. Sip of coffee. He's asking, what is the best time frame when we do scalping? As we know, the market looks bullish, but when we zoom in on the time frame, it turns out the market situation is down. Well, I know a lot of beginner traders are like a little bit attracted to scalping the markets, for example, on the 1 minute time frame or on the 5 minute time frame. And I mean, by all means, PrimeXBT with the new crypto futures, for example, they have a great product to do so as well, because you can see super low fees here, 0.01% when you work with limit orders, 0.02% when you work with market orders. So this is, at least from the fee structure, is set up that you can use, of course, if you want to scalp the markets. If you haven't tried it out, really, I highly recommend it. Great product. We also did a video on this, or live stream on this. For sure, going in the future, going to use this also more during our live trading sessions. But back to your question, sorry. When you scalp, and you haven't done scalping before, you need to be aware that especially on the 1 minute time frame and on the 5 minute time frame, you are competing against the sharks. Really, the sharks in the investment banks, the sharks at investment managers like BlackRock, for example. But these sharks are not human beings that are sitting there and doing click and trading. They are algorithms, and especially also for the last years now, AI. And these algorithms are designed in a way that they can analyze the market in such a quick way and execute orders at such a speed that they have analyzed millions of data points and executed thousands of orders in the time it takes me to do a click with my mouse. And the question here really is always, in my opinion, when I'm just starting to trade, why should I do this? Because the odds are not on my side. Why not? You can still day trade, of course, but why not, for example, choose a daily time frame for this, and then look at, hey, what are good areas here for buying and selling at the moment? For example, Bitcoin. This is also why I try to analyze the markets always a little bit. Where are areas of support and resistance? Just by trading those areas of support and resistance, and we saw yesterday how quickly we were driven off this resistance here. So that was an idea short. I just slept through it. I was not fast enough to execute my order, or as a matter of fact, to inform you guys on Telegram about this order too. But I think we did a couple of days earlier, actually, something like this. So instead of doing the clickety-click action on the 1 minute time frame or 5 minute time frame, why not choose your orders on a daily time frame? Look at support and resistance. Say like, hey, if we go up into this area of resistance, I want to place a short order. And you can do so very easy, if you work with limit orders here, you can order your limit price, you can close your trading terminal, and then you can go to work or wherever. Yes, I know it's not as actionable, no? There's not as much adrenaline and clickety-click action. But remember, we are here to earn money, not for the clickety-click action. Trading is not a game. It's a profession, it's a business. And my advice really is, do not start trading on 1 minute or 5 minute charts, at least not when you're completely new to this. If you have some experience, if you've done this for half a year, for a year or longer, and you had your fair share of success, maybe, of course, it's a different picture. But it's the same like if I just want to learn to drive a car and I get into a Formula One car on my first driving lesson, and I kind of am under the impression immediately that I can win a Formula One race against Lewis Hamilton or Max Verstappen or whoever is, one of the big shots there at the moment. I don't follow Formula One for that reason. So be careful there. Of course, the more you zoom into like 1 minute charts, 5 minute charts, the more also the whole chart picture is going to get clustered. It's in German, we have a saying, sometimes you cannot see the forest because there are too many trees. That's why it's always important not to just concentrate then on 1 minute charts or 5 minute or 50 minute charts, but to also zoom out a bit on daily charts, on monthly charts, on weekly charts, on 4 hours charts, which, as a matter of fact, work very, very well, in my opinion, as well. But yeah, of course, we are also in the future going to do some scalping sessions again. Don't worry. All right. Well, thanks a lot. I'm going to pass this on to the developing team and product team. Thanks for your kind words, Sami. And yeah, this is it for today, really. Thanks for attending. Remember to leave a like, subscribe to the channel, and if you want to, also leave a comment underneath. So later on, the algorithm is going to pick up the stream a little bit and going to show it also to other people. Remember to also enter our Telegram group. You'll find a link in the description of this video. And then on Friday, we're going to later see each other again for the release of the non-farm payrolls. And let's see if we are then smarter how the future strategy for the rest of the year of the Federal Reserve Bank is really going to be. I'm looking forward to it. I hope you're doing too. Until